Good morning, YouTube. This morning we're going to talk about one stock. We're going to talk about Home Depot. We're going to talk about three things. One is kind of how I learned the investment. I don't think I know very many investments, but there's a few I know. Home Depot, maybe Walmart, VIG, certain areas of real estate, and certain sales things that I buy. And I tend to either expand those zones of competence or operate within them if the opportunities are big enough. And so first we're going to talk about that, and then we're going to talk about what Home Depot looks like from an investment standpoint, why it's a good long-term hold, or increasing your position in. And then lastly, we can just go a little bit into what I did lately to make money based on that information and understanding. And so we'll start with the just to understand the investment. So probably, 2008, I bought Home Depot the first time. I bought it because Warren Buffett bought it, and I bought it in my kid's education IRAs, and I bought it in a brokerage account. And it went up probably 20%, and then Warren Buffett sold his, so I was kind of following him more at that point, and so I sold mine, except I did not sell mine in the education IRA of my son, because it was, just a smaller position. I had nothing else to put it in. And so then he kept it, and I watched it over time, and over time, it went from 20-something dollars a share that I had bought it at, and it went to 100 and something, and then 200. Now it's at about 300 and something per share. And so as that kind of went on, I really delved into looking at that stock, understanding what it was paying out to its stockholders, and the value in the company. And then over time, I acquired more positions, at places like the March, April 2020 crash. And some of those crashes, I would acquire Home Depot stock, and also an index fund that I had held for long term. And so that's how I got to understand it. Was just long term holding it, just kind of watching it, and then seeing the price it be mispriced once in a while based on that knowledge. We can go right into the company. All right, so this is what I find to be interesting, which is this is outstanding shares. And so if you picture this way. There was 1.69 billion Home Depot shares out there. And so it's kind of the opposite of inflation with good stocks. Inflation is what the government keeps printing money, and your value of the money goes down. And so the opposite is when Home Depot continues to purchase stocks, to decrease and destroy stocks, the total amount of stocks goes down, therefore driving the value. And so if year over year, you can see the percent down here below of the stocks that it destroyed in that year. It bought back. And so over the last, let's say, 10-year period, it went from 1.69 billion shares down to 1 billion shares outstanding. And so that's a return of these percentages every single year to shareholders based on the increase in value of stocks that would drive. And so you've got a year where there's, 6.9% down to a year down, there's 3.4% return on that. Now, that is a real return. It really drives the stock price, and one of the reasons their stock price has gone up so much over 10 years is because of this. Second thing I want to show you is the dividend history. Now, you look today, and per quarter, they're paying you $1.90 per share. Their shares are, let's say, 277 to $3.50 per share. You look down here, 2020, 2018, it was $1.03. So you've got almost a 90% increase in how much they're paying out right here. You go back down to 2011, 25 cents. So you got a fourfold to $1, and then another almost fourfold to there. So you got a 700% over 10 years increase in that dividend payout. That's pretty impressive for a stock that is also buying back its shares. And so if you look at a particular year, let's pick a good one here. Right here, 6.9%. And so if you say this averages, let's say 4% on the stock buyback per year, and you go to here and you look at these percents and you say, 2.8, 2.5, you're looking at a 6.5% payout on this stock between the two. That's pretty incredible, return on your investment. Plus, this increases the value of the stock proportionally a lot of times to the dividend and drives that basis, decreasing what your risk is on that stock. So we can look at that effect over time, and this is the 5-year chart, how that drives value. Now you see these ridges, these are the stock market and the value of the money going up and down. I did some purchasing in here, not at the bottom but in here, and then you look at the max and how that drives the trend on Home Depot stock. I just wanted to share that stuff with you so you understand how I understand the investment and how I look at it. And then lastly, I want to show you what I did with some of this information. So understanding the value of the stock, I was at a 96% allocation. The stock price went down to 305 or 7 or something, and I was not willing to buy that stock because of my allocation percent. Now, if it would have went down to 274 like this at that time, then I would have bought. But just a minor opportunity I couldn't take advantage of in that stock. And so my target allocation, let's say, is 100%. And what I do is I try to vary my target allocation in a stock based on the stock price. So the stock price is really high, I try to decrease it a little bit, just pare it down a little bit, and it was really low, I might increase it now. Over a period of time, I've mostly just been increasing it because I haven't had enough of the stock compared to my overall portfolio as I wanted, but I was getting to that point, and this is how I want to deal with it now. And so when it went up to 321, I sold 30%. I sold 66% of my target allocation, which is a sizable amount. And then when it went back down, I went back to 80% target allocation. When it went down even further, I went to 102%. Now, if it goes down once again, I already have the cash there, ready to buy again. Let's say if it goes down to 245 or something, or maybe 250, I'll buy that last percent, and I'll be at 120% of my target allocation. Now, the thing that enables me to do this is, number one, like I said, I understand the investment. I've held it for a long time. I've seen the charts. I know the values of how much they pay out. And because I've held it a long time, I kind of know where the value proposition is at this point in the market. And so I just wanted to share this with you and show you kind of how I was handling that particular investment. Now, for you, step one is to look and see about an investment you can get into and hold for long term and understand the value of that investment. And it might take years for you to understand that. I would suggest you do that with like a dollar cost average every month into a certain investment so you can watch that investment and understand what it does, when it's high, when it's low. So you're not really reacting to market conditions. You're more reacting to that stock being on sale or the price being a little bit high compared to what you want to be at. And then positioning yourself maybe at a target percent that you can go 20% up or down based on regular market conditions. I hope you enjoyed the video. Like, subscribe, comment, let me know your questions down below, and I'll talk to you later.